Nonprofits are always looking for new ways to increase their revenue to support their programs and initiatives. This could be through membership fees, selling tickets to certain programs such as plays or educational workshops, or even running a side business, such as a coffee shop or a bookstore, where the earnings will be put back into the nonprofit to use on their initiatives and to support their programs. But before your organization becomes too self-sufficient and relies less and less on public donations, you need to become familiar with an operational test called the Commerciality Doctrine. Let's jump right into it.
My faith rising. I'm crawling out the trenches, holding me.
Hello visionaries, welcome back to my channel. My name is Maresa Talbert. I'm the founder and CEO of Talbert Law Office, your favorite go-to legal resource for all things business, nonprofit, and intellectual property law. The Commerciality Doctrine dictates that if your nonprofit organization is operating in a manner that is excessively commercial, you are now competing with for-profit businesses. And those for-profit businesses pay taxes. So guess what you're going to do? You're going to pay taxes as a tax-exempt entity. This commerciality doctrine goes hand in hand with the public support test. If you are not familiar with the public support test, I have a video. I will link it down below and I'll link it up above. So let's break this down. ABC Charity is a 501c3 nonprofit whose mission is to teach workforce development skills to formerly incarcerated individuals with on-the-job training. In order to accomplish this goal, ABC Charity builds and opens a restaurant. This restaurant is a commercial activity that could compete with for-profit businesses, namely other restaurants. On the other hand, let's take the same example. But instead of operating a restaurant, let's say that ABC Charity teaches these workforce development skills by operating a soup kitchen that provides food to unsheltered individuals. That sounds much different, right? Same results, different activities. So how do you determine if you're teetering on that fine line of operating in a manner that is excessively commercial versus operating in a manner where you're just fundraising within your exempt purpose as a tax-exempt entity? Well, I want to give you 6 factors that the IRS will consider when determining if your activity violates the commerciality doctrine. Number 1, price margins. The rule of thumb is that nonprofits should not be trying to maximize profits. So any goods or services that you offer for a fee should be at cost or below market value. Number 2, competition with other for-profits. And the question and answer here is, do for-profit businesses generally engage in the same activity? Number 3, accumulated profits. So the IRS will consider whether your nonprofit organization has accumulated a large reserve and whether you have a clear view for its future intended use. Got a whole bunch of money sitting in the bank? That may not be a good look for your nonprofit organization. Number 4, who is your customer base? So the IRS will consider whether you are selling your goods or services to other charitable or nonprofit organizations, whether you are offering those services to a charitable class, or whether you're selling things straight to the public. Number 5, your business and marketing practices. So this factor looks at whether the organization is paying trained and professional staff to host events or put on educational workshops, or whether the organization is using volunteers. Another consideration that this factor takes into account is whether promotional advertising is marketed to the general public or a specific set or class of people, such as veterans or, I said earlier, the unsheltered population, or youth. And last but not least, number 6, the IRS will consider donations. Where are your donations coming from? Which again points back to that public support test. Is your organization relying on income and fees that you charge for different goods or services? Or is your organization diversifying where revenue comes from and is still relying on public support to support its exempt purpose? The determination of an organization's primary activity is based on the totality of the circumstances. So what that means is that not one factor determines it all. No single factor is given more weight than the other. They all matter when it comes to a determination around the commerciality doctrine. The last thing I want to mention when it comes to this commerciality doctrine, if you heard me earlier in the video, I said if you start competing with for-profit businesses, you will start to pay taxes like one. And this is called UBIT, Unrelated Business Income Tax. UBIT is specific to nonprofit organizations. Even though you are a tax-exempt entity, when you start generating revenue like a business outside of your exempt purpose, you will be taxed on that income. And don't you for a second think that you can get out of paying those taxes just because you use that extra profit within the nonprofit organization. It does not work like that. Now, this is not all inclusive at all. There are exemptions and exclusions to UBIT, and I will not get into those. If you want to hear more about those, let me know in the comments. This is just to make you aware of the possibilities so you can do your own further research, or so you don't get caught off guard by getting a tax bill because you've done something and you didn't understand that this was a thing. So the moral of this story is to be very judicious when you are offering goods or services for a fee within your nonprofit organization. Even if your nonprofit has become more entrepreneurial and your organization can rely on the revenue that's generated from those endeavors, continue asking the public for contributions. Continue applying for those government or foundational grants, in addition to whatever fee-for-service model that you may have. It becomes very important when we're considering those factors that we talked about earlier related to the commerciality doctrine and also that public support test. So that's all I have for today. I hope this video was helpful. Please let me know if you have questions in the comments. Don't forget to tell a friend to tell a friend. And until next time, this is Talbert Law Office, your favorite go-to legal resource for all things business, nonprofit, and intellectual property law. I'll see you in the next video.
I done made it this